Thank you. Good afternoon, ladies and gentlemen. Come on, that's not the energy of young people. Good afternoon, ladies and gentlemen. Once again, you're welcome to Business Acceleration Summit. It's been an amazing journey of impact, transformation for Rise of Africa, Don't Look Property. But right about now, we'll be having the last panel session for the afternoon. And the theme we'll be having is Finance Reimagined, Personal and Corporate Finance 2026. It's going to last for about 30 minutes or less. Okay, so oftentimes in business, a couple of persons have challenges separating personal finance from the corporate funds that comes into the company. At different interfaces, we have that kind of challenge. So to facilitate, in the course of this panel, we have two seasoned speakers in the finance industry to carry us through this particular conversation. He's a seasoned banker and leading financial educator with over 10 years of experience. He convenes the boardroom host Money Matters with K on Universal TV Africa and runs Money Monday with K, simplifying finance for young Nigerians. Ladies and gentlemen, please, I'll put our hands together as we make welcome Godfrey Kelechi as our first panelist. Please don't stop clapping, don't stop clapping, don't stop clapping. You're welcome, sir. Our second panelist is a personal finance trainer and coach. She spent many years, about 15 years and counting, working in banking, financial services sector before transitioning into financial education and coaching. And her name is Oboro Olumoye. Please put your hands together as she walks down to the stage. Don't stop clapping. Put your hands together for her. Please, once again, help put our hands together for them. So our first question, very quickly. We've had challenges. How did we know you would start first?
That was ladies first. Trans videos.
Okay, no problem. So part of the challenge we've had startups, businesses have, is the fact that they cannot separate personal spending from corporate spend, personal finance from corporate finance. My first question would be, Godfrey, is what are the most common financial mistakes Nigerian entrepreneurs make their startup businesses?
Thank you very much. We could ask everyone. Hi everyone. Okay, so the major, I would say it's a mistake per se, or it's bad financial habits. With that now to the victim mistakes. Now we'll start by looking at some of his personal accounts to run the business. And we're looking at some who doesn't know how to put a price mechanism to their products. They don't know how to price efficiently. It's actually for their price. Now you're also looking at someone who is also a spendthrift. What of the case that whenever, you know how you get emotional, maybe go to a heartbreak, and the next thing you want to do is shopping. Go on a shopping spree. Now, if you're not into business, you'd understand that same person would just want to buy unnecessary things that they don't need, even for their businesses. These are the mistakes. These are the small things. Because the funny truth is, the little mistakes you make, as they pile up, they get to affect you later. Your numbers, it shows you your numbers. You'll be like, okay, today we need 100 naira, but unfortunately, I can only see 10 naira. How manage? What happened? You're not looking at the numbers. But the funny thing is, you are the same person calling out the shots, making the expenses. There is nobody coming behind you to steal the money to the pocket or anything. So you see the small habits, the small bad habits you have, not saving, not budgeting, not reinvesting in the business. These are the small things that affect your business. So, for example, now you make money, we get profit of 16 naira. Instead of you to convert the profit in the business, you're like, this 15 naira is my. In accounting, there's something called the HC concept. The person is different from the business. For example, now Aliko Dangote as a person is different with Dangote Group companies. If you want to sue Aliko, or sue Aliko, or Dangote Group companies. If you want to sue Dangote Group of companies, you sue Dangote Group companies, not Aliko. In that same vein, the money your business makes, it's not your money. It is the business's money. So if your business make profit, you're not gonna make profit. The business paper, what the business also is his salary. You might be thinking now, I'm the one that made this business, I started this business, I own the whole thing, I'm the CEO and everything. You're still an employee of the company. The company employed you. It's your money used to start the business. That is what we call capital. And for that capital, returns need to be made on the capital. So the only thing the only thing you own from that capital is equity. Own 100% stake, which means you own all the dividend coming out from that equity. That is one mistake many entrepreneurs make, even in small business. You see, market, you open a small shop, and then she feels that every 1 naira, 2 naira comes as profit is her own. It's not her own. So what the business sponsor is
So it's a habit problem.
a habit problem.
Please put your hands together, Frank. Very quickly to you. How can startup businesses couple this particular challenge? What are those measures that are put in place to ensure that this particular challenge doesn't constantly repeat itself? Okay, sorry. What are those measures to put in place as a business owner to ensure that this particular challenge doesn't constantly repeat itself?
So first of all, I want the people at the back to hear because they look like the people that do what I'm about to talk about. I've seen them. Try the one wearing pink blouse. So, like Kelechi has said, open two accounts. And this is where my problem is. Me, I'm quite sorry, calm down. So they will tell you open two accounts. Abi? One for the business, the other for who? For yourself, personal. My problem is who is the signatory to the business account? So only them by themselves will still go back and debit the business account, and you will see Nkechi Hair Salon is debiting Nkechi Hair Salon account 500,000 naira to buy Bone Street or the Kwamma. So the problem is not in the separation of the accounts.
Okay.
The problem is in the head of the owner and the structures in place. So the first thing for me as a business owner is protect the money from yourself.
Okay.
And there's only one way. Let no man deceive you. The only solution is to set up that thing called a financial plan. The financial plan will tell you this money, this 100,000 naira, take it out. Your friend will say, let us invest it. But your financial plan will say, invest in what? In what ratio? What percentage? How much you go into fixed income? How much you go into liquidity? How much you go into long term? How much you go into short term? And now let me wrap up by saying this. A lot of times we hear people say things like, and in all of this, you will find out that the solution still comes back to the plan. People will say, separate, don't put all your eggs in one basket. My argument is, don't put all your eggs in baskets made of the same material. So sometimes you separate the eggs, but all the comb are made of feather. So it's the same risk. And that's what I would say to a business owner. First of all, set up your financial plan. Just as you have the business plan, have a personal financial plan. If you follow the plan, you can never go wrong.
Please put your hands together for her.
That man at the back is not clapping.
Please clap, please clap, please clap. Thank you so much, man. Thank you so much.
In this part of the world, we have a lot of business startups that always talk about we want to access loans, access
credit facility. Can you hear me now? Okay, sorry, I'm used to my expert. So, in this part of the world, we have business owners and businesses that are always big on we want to access credit facilities, we want to access loans. We're doing everything possible to ensure we access that because they believe the more capital you have, the more expansion happens to your business. The question is, what are those structures that need to be put in place to ensure that those loans doesn't come in and get wasted?
Okay, I want us to guide from this and Escobar documentation, discipline, and clarity. Now, before you go to about say you want to access a facility, so before you even come to, reverse that, say, I was to invest in my business, what documents we actually have? In your business register, as a first question, a simple question, get us your financial statements and your bank documents showing that this business is actually pretty this disgraced or checked. Are you making profit or loss? Now, the inflow and the outflow, just like I said earlier, a market's hair salon is debited market is to buy Bond Street. The activities going on in the business, are they funding the business or are they making sure the business stands tomorrow? So all of this, your financials are tend to show all of this. Your bank statement can show all of this. Now, the second thing I talk about is discipline. Are you disciplined enough to follow through the financial plan
Are you disciplined enough to follow through the financial plan you built to say, oh, this is my finance, this is the business plan we had for this business. We've got it from here to here, here to here, here to here. This is where we want you to come in. Have you been disciplined enough to follow that plan to that point where you need more hands to come in? The idea of getting a loan is not to oh, your BF is shaking, you need a loan. No, the idea of getting a loan, the idea of getting investors is to expand. You don't take a loan to start a business. You don't take a loan in a sense that your business is falling and you want to get together. You take a loan because you want to expand your business. And the idea of expansion is there is heavy demand, but there is little supply. So you need money to get, you need liquidity to add and push up the supply for the demand that is coming in. Now, the third part is clarity. What are you taking this loan for? Clarity in the sense that I am going to take this loan from these people to do A, B, and C. I am going to give you back this percentage as equity, or I'm going to pay you back this thing as interest. We must be in clear terms what you want to use this money for, what we are getting back at the end of the day, so that everyone can go home happy. You see these three things, but if you can keep to it, documentation, discipline, and clarity, there is nobody you can meet for fun that will not answer you.
Thank you so much. Please put your hands together for him. Ma'am, do you have something to add to?
Okay, so I would have added, in addition to what he has said, which is critical, and those are the ones that are the hard ones, I would also add the soft one. And this is where many people miss it when they go for loans. If you come to meet me, and I always tell people, before you go to a bank, put yourself in the position of the lender and answer the question. You, Tobaro, if you were coming to Tobare Bank to borrow money, would Tobare Bank lend to you, Tobare Olumoye? If the answer is no, why are you wearing cloth and coat and going to ask for loan? When you already know that the answer will be no. And you will answer the 5 C's of credit. You will answer it by yourself on your own. But those will still be the hard parts. For me, the soft one, and that's where a lot of people miss it, is where is the money coming from? If you look at most business plans, you will hear things that sound like authentic madness. Where you hear someone come and say, we cook the best jollof rice in Port Harcourt. Once we just open our pot like so, 200,000 people there Port Harcourt. Therefore, if we take 10% of the 200,000 people, 2,000 will cost up our jollof rice. You don't have anything to show that there's empirical data supporting it. How many customers have come to buy your jollof rice in the past?
Okay.
Because as a lender, I want to see where my money is coming from. My money is coming from the pocket of the buyer of the jollof rice. It is not coming from your business plan. So those soft things, how will I get the customers? Do the customers have capacity to pay? If the customer takes food and does not pay, do I have capacity to collect? The soft things. If you add them to what he has said, yeah, chances are you will get the loan.
Beautiful. Please put your hands together. Are we getting value? Are we getting value? Are we getting value? I mean, clap like you are. All right. Thank you. Okay, man, let me give you a question immediately. Of course, you know the nature of what's happening in our economic terrain in Nigeria. Very high rising inflation. Business owners, how do they address the challenge of pricing and costing? Okay, how can they be strategic? Of course, you know, you have to sell and make profits. Okay, so how do they address the challenge of pricing and costing in business in 2026?
Okay, so if you say business owners, I assume they're already in business.
Yes.
They're not starting out. But for those who are starting out, I will tell them first thing, get your pricing right. Because for many people, their pricing is whack. You are pricing out of empathy. You are sympathetic in pricing. Some of them, when you tell them what is the cost of making this cake, an 8-inch red velvet cake, they'll say it cost me money for flour, money for sugar, money for red coloring, money for eggs. And then they will add it all together, come with 5,000. They will slap 2,000 on top and say the 2,000 is profit. Madam, the 5,000 is not your cost. They are forgetting that the AC that was blowing them during the baking of the cake, someday in future, that AC is going to spoil. When the AC spoil, where will the money come from? The spatula that isn't to turn it, the leg that is standing is going to depreciate. When depreciation occurs, so they don't recognize all of the costs. Oh, yeah, business owners, understand your costs, then get your pricing right. This question is not about pricing. Now, if we assume that you have got your pricing right, for you to survive in an inflation, you must understand that inflation will continue to move. It is a moving goalpost. Your systems must move accordingly. And now, and I'm going to come back to this because my quarrel with many Nigerians is, oh, I opened this investment 10 years ago. I was putting in for 5,000. The only thing I have got is 50,000. Oh, it is a useless investment. Or at the time you were putting 5,000, your salary was 50,000 naira. So it was 5%. Your salary moved from 50,000 to 100,000 to 300,000. Your salary is now 500,000. Explain to me in a way that makes sense with bullet points why you are still saving 5,000 naira. So your earnings have moved with inflation, but your savings have not.
Wow.
Means that you have not become realistic with inflation. So my argument is, if you want to survive in inflation, as you earn more, save more, invest more, and you don't have to wait until you have bought some, because there's one guy, if you're saying that one with blue coat, what he's saying is that I will save when I blow.
When I blow.
From the coat, I know that he will not blow this year, next year, sometime forever. So if he doesn't blow, will he not save? Now the question is, can you start saving with your blue coat? Kachineke Mezioku, when you move to light ash, you will.
If you are clapping, clap
So,
way.
So can we start where we are with what we and just start small. And I'm going to say to everyone here, especially those who are eyeing me in anger, that first of all, don't get angry, get rich. But it's okay. So consistency trumps large deposits any day. The man who is able to say, I will consistently save 5,000 naira week on week, compounding will favor him more than the man that says, I will save 5 million at the end of the year when I collect akawo. So for such people in inflationary economy, save consistently. It can be 1,000 naira, it can be 2,000, but be consistent, obey it. And then the second thing I will say before I hand over the mic, be careful about concentration risk. Concentration of the business owner, concentration of the customer, concentration of supplier, concentration of product. So many people are concentrated around something. For some of you, your entire business is around one holy God-fearing. Oh, this staff is not a thief. Very God-fearing is somebody. What if perhaps somehow that staff gonna die? If the staff dies, are you saying the business should die? If the staff decides to marry man, because you know how men behave, they'll marry you and take you away from your center of comfort. If the man takes her away, can your business still thrive? If the answer is no, it means it's concentrated around the staff. There's also concentration around the owner himself or herself, meaning that if the owner dies or if the owner is unable to function, can the business function? If the answer is no, then understand that there's concentration. There's also concentration around product. Some people say our core product is jollof rice, and that is fine. But what if there's a government, let's say, and with every due respect and responsibility, let's say VDM, because let's use influencers that can't shake. Let's say VDM comes out and says, oh, I can show you without beyond reasonable doubt that if you shop jollof rice, you're going to die in 6 weeks. Before they will try to prove it right or wrong, the jollof market does what? It crashes. So the question is, if jollof dies, does the business die? Can you build other options? And of course, the last one will be concentration around the person giving you money. Some of you say, oh, I'm a big contractor in Shell. No more Shell, Renaissance. I'm a big contractor in Renaissance. They give me 2 billion every week. Oga, if Renaissance dies, and please don't sit here and tell me nothing will happen. The business can never die. Every business can die. So if anything happens to the person who is responsible for giving you funding or inflows, will the business survive? If the answer is no, then it is concentrated. If you fix your savings, investment, and fixed concentration, your business will be fine in spite of inflation.
Thank you. Thank you. Please put your hands together for her. Put your hands together for her. So with our explanations this afternoon, it's obvious that there is a habit problem. There's a cultural problem around finance. Can you tell us, because the whole conversation for today is forecasting the possibility of business breakthrough and expansion for next year. Godfrey, tell us about some kind of habits and culture that business owners should have if they will truly expand for 2026.
Okay. I said a whole lot of things that I technically agree agree with, and one of them is she talks about not being concentrated. Sorry, one of them she talked about is not being concentrated. Now, in every market, there are competitive goods and complementary goods. You can choose a side to partner with. Now, can your goods, just like PB&J, peanut butter, just like butter and bread, you're making bread. Do you have a complementary product that can go with bread? I always use this example. The woman that sells akara by the roadside always sells akara, but along the line, she will not add bread to it. The idea of adding bread is bringing more customers.
more customers, more cash flows. There is always something that can complement your business, add to it. I always see how mechanics attach themselves with people that sell spare parts. One cannot go without the other. The idea of doing it is so that if you want to buy parts for your car, you come to the shop, you buy. If you want someone to repair your car, you go to the mechanic, you repair. So every business should have complementary factors. Real estate, for example, you sell land. At the same time, you can see open a company by the side that does construction, or that one that sells cement, or that one that sells sand, or that one that sells roads. And it is still the same company, parent company. It is still the same parent company, but a conglomerate of different brands doing, things in the real sector angle. Now, the next thing I want to say is this: always be careful and mindful of your numbers. Always be careful and mindful of your numbers. Every business has like a burnout period where they run out of cash. Make sure you have an emergency buffer, because there are days that business are going to be slow. Your emergency buffer should be basically between around something that can carry your business for at least 3 months. Your emergency buffer. Imagine the period that COVID happened, and maybe a CEO is very emotional. He doesn't want to lay off their staff. Where do you think the salary is going to come from to pay people, even if they're going to pay them half salary? Where do you think it's going to come from? It's going to come from the emergency. Now, when you are making sales or when you're generating revenue, keep at least 30% or 20% or 10%, a percentage, because the thing is, the more you do it, the more the volume gets to increase, the more the buffer gets to increase. Keep something out of your sales, keep something out of your profits that can be used to handle emergencies when they arise. And the third one is that business that is giving you the money, look for a way to reinvest it and expand it, whether you like it or not. Look for a way to reinvest in it and expand it. And the idea about expanding is not having multiple shops in different places. The idea of expanding is using the same amount of money to make more money. Using the same amount of money to actually make more money in different areas. Thank you.
Thank you so much. Please put your hands together for them once again. We're going to be wrapping up shortly, but I want to believe there are questions. Please, if you know you have a question, I'm seeing one hand there, another hand there. We'll just entertain 3 questions. Can an usher just help us identify with them? Just 3 questions, and then because of time, we'll call it a wrap. Final question, ma'am. 2026 is fast approaching. In a couple of days, we're stepping into a new year. Obviously, there's a spending problem. Where should business owners invest more money in when it has to do with spending in their businesses? What's happening? Where should business owners push their money? Because there's a spending problem. Sometimes you see business owners spend so much in branding with poor content. All right. All of this mismanagement, how do you address that challenge?
Okay, so again, I'm very careful when I give generic responses. The response will be specific to the business type. There are some businesses, and I'm going to say this irrespective of the business you do. If you've gone through my test before, there's a question I always ask: do you earn from the 4 recommended streams of income? A physical product, a digital product, a physical service, and a digital service. Going into 2026, I beg you in the name of God, earn from these 4 streams. It is extremely important that your passive income overrides your active income. You see this thing called taxation, it has come and it has come to stay. Many of you are focusing on the taxing part. Please go and pay attention to the penalties. And these guys are going to collect. Now, the question is, we already know we will pay the tax. Like me now, I already know that my prices will go up to accommodate the tax. So you are going to pay my tax on my behalf. So going into 2026, I then look for the taxpayers. It's not only government that knows how to pay tax. You yourself, look for who will pay tax. Like my husband now, he doesn't know he's one of my taxpayers. So you can look for a fellow taxpayer. It's important because next year, tax becomes a fixed and increasing cost. Something has to compensate for it. Secondly, I know many of you, it's because this event was free. The one that is paid for tomorrow, just check. If there is a year you will invest in knowledge, it is supposed to be this year. But since you have refused to, you want to use your money for Oble, it's fine. Next month, please put money in knowledge. What will separate the rich from the broke will be information. And nobody is ready to give you free information. So as I was sitting down here, someone was using Connor to ask me a question. I used Connor to send her my price list. The same one corner. Let's all be mad together. If you are here Understand that you are a reservoir of wealth. Now the question is, have you collected your wealth? Do people price your wealth appropriately? If you can. So for next year, understand your worth and price appropriately. And in simple terms, if you say all I am is a weak seller, then we will pay you a weak seller's rate. But if you say I beautify women by crowning them with elegance, we will pay you a crowning woman's rate. Package yourself and we'll pay appropriately. If we cannot pay, then don't market to us, market to those who can pay.
Okay.
They exist.
Wow. Please put your hands together once again. So right about now, we'll be entertaining just 3 questions. 3 questions. I've been instructed to take just 3 questions. I saw a hand there in the middle. Please, can someone help me with the mic? Can Anosha help me with the mic? Okay. Okay, come out. Just come out. Please do everything you can to go straight to the question and direct your question to somebody amongst the both of them. Thank you.
Thank you. Good afternoon. Because my name is Alberto, and you sir, over to you, sir. You said something about putting some figures outside. If I'm to rephrase, I'm talking about raining days where the business might not be striving, but you have something like I run the business for the next 3 to 6 months, as the case may be. It starts you being down financially. And you also mentioned about savings. Now I want to get it straight. Is it that same money you're putting about by percentage as well? You mentioned 30%, 30%. Is it the savings that you're going to keep aside to run you for the next 6 months in case there's no sales? Or from the sales, you're going to separate a percentage for savings and also from that same sales, separate a percentage for the raining days? Thank you.
All right. I don't know. It's okay. All right. Thank you very much. The idea of saving has three things attached to it. You save for three reasons: transactions, emergencies, and speculation. Right. These three things in particular, and most people save them in the same account. Most people use separate accounts for them. The idea is this: when you have emergencies, you use your emergency or your emergency buffer to take care of your emergencies. The idea of savings is have money in the future that can save you later. When you have transactions to work on, future transactions to work on, maybe you're in real estate now, for every ASLO you get, you keep something aside to get properties later, underdeveloped properties later. The same angle, you still keep money aside in case nothing comes, still have this money to pay workers. In the same angle, you now have money set aside that in case one chic property comes up that nobody knows about, you can just key in. Or you know how you do clearance sales and all the rest. You have this money to run that. That is the idea, basically. So if you're saving out 10%, divide the 10% in three parts. If you're saving out 20% of your profit margin, divide the 20% in three parts. If you're whatever margin you're using, just make sure you divide them in three parts and have them take care of different things at the same time. Now, what problem most people have is they just have the money in one place. Once emergency arises, they go there, bring out money, make payment for this, make payment for that, make payment for that. And the funny thing is, that particular thing, that was not what the money was for. But that particular account has, depleted. So when the main emergency now arises, where do you get the money from? You see, this is the problem many people face. And that's the idea of having a budget. You know that this is what you can handle and you go for it. I don't know if you get it. So when you know that, okay, this is the money we set aside for this thing, oh, it's got enough. Can we borrow from this side? You're borrowing with the knowledge that this money you're borrowing from is in case something happens. So you must find the way to replace it as soon as possible.
Okay.
Are we good?
You got him right? Please put your hands together for him again. Please, straight to your question and direct it to someone.
Say you should dash me one plot of land. It's not to clap.
Okay, my name is Victor Rocha, and I am a digital productivity coach. I teach systems and tools on how to become efficient in your workplace or businesses. Now, my question is, I have a course, I create courses, and as I'm being very specific with my question. So, as a course creator, I have a detailed account of everybody that comes through my academy and all of that. I have the detail of how the finances are. If I want to, like you said, if I want to separate my business money and finances from me as a beginner, I just started this year. As a beginner, I don't have enough funds to hire an accountant or something. How do I go about that complete separation such that even if I want to spend on frivolities, there are systems that I can afford at my level to help me not to do that?
So first of all, okay, you are looking at me. That's why I answered. If not, I would have left it for. First of all, let's agree that not everybody started business for business reason. Can we agree? Some of us started because hunger wanted to finish our destiny, and oil and gas did not employ us. If you have agreed, that's fine. Then you know you are running a what? A hobby. Let nobody pressure you with systems, structure, accounting. Don't bother. As you bring the money, just flex. Then divide it according to your future self. You know that it's just you and yourself. That is easy. I assume that's what's happening because if not, explain to me why a business you started 2 months ago. I'm already listening and hearing account for flexing. Your business that has not started breathing well, you want to oppress it with flexing. So since I've heard flexing from a newborn account, I assume you are doing it as a hobby. And it's fine. In that case, I will tell you, of course, you've already set up your financial plan. Your financial plan will have a budget that will have a budget for flexing. It will not come from the business money. The business cannot flex you. However, the business can pay you dividends. Your dividends can flex you, or you can take owner's draw. When you draw as owner, you can now flex. You're looking confused. Okay. It is your question. You're asking, how do you do it so that you will know how to separate the money? First of all, you cannot collect money from the business. That's point number one. The business will go back, the money for the business will go back into the business to grow it. However, as the owner of the business, you are expected to draw salary or owner's draw. Those are the two ways to collect. I hope you understand. You're a cost creator. All of us are cost creators. When you make, let's say in a month, you make 1 million naira. Your question is how much of this 1 million is your own and how much?
That's your question.
Okay. My question is this. Let's assume I want to set up a proper structure for my business. As a beginner, I don't have the funds to probably. Do you understand?
Yes.
I don't have the funds to hire an accountant and all of that. But as a beginner, I want to set up a structure such that even if I am tormented by demons, I want to spend on my or something, I will not be able to tamper with the money. There is a structure in place that at my level I can afford, or at anybody who is just starting out in business can afford.
Okay, so let's make it simple for you. Set up your financial plan. That's the basic structure. Your financial plan is the basic structure. And if you are still looking at me confused about what a financial plan is, please go and watch my YouTube video. The answer is too long. It's too long because your financial plan is made up of an investment plan, a risk plan, and all those plans must be put in place. That is the structure the business needs, which is why a physical structure will have HRO, accounting, administration, and all of that. But you don't have it as an individual. So your financial plan will help you play that role. And it will tell you where to put what at what rate. That is the structure you need to set in first. You don't need an accountant for that.
Can I add to that? As a business person or as a CEO or as an entrepreneur, you are your first CFO, you are your CMO. Everything that your business has, you're the first person to market your product. You're the first one to pay your finance. Whether you like it or not, you have to do all those things by yourself. First of all, understand them before you now start looking for people to hire. Now, here's the idea. Let me just give you something that you can do very easy. Once, first things first, I don't think you need to get plenty money to open an account. Just get the right documents, register the company, and open an account. Now, secondly, every income and expenses, record it. If you can use Excel very well, have a side for income, have a side for expenditure. At the end of the day, minus it, what you have left is your profits. As simple as it can be. Now, ask yourself, with this profit, what do I plan to do with it? Let me just make life easy for you. With this profit now, what do I plan to do with it? Now, remember I said something earlier. Your money and the business money are not the same. The business money belongs to the business. Your money is your money. Like you said, owners draw, pay yourself a salary. If you've done that, with the money, ask yourself, this is money now. What do I do with it to help this business? Not to help you, to help the business. At this point now, do I need to hire an accountant? Yes or no? Think about the question critically well. You'll be the one to tell yourself the truth. That's just the gospel truth. You are the CEO of your business. Just sit down and have your board meeting by yourself in your head. And every answer that you're looking for will come straight to you. Google is a friend.
And don't forget taxation.
And don't forget tax as well.
As a consultant, it's 25%. It doesn't obey the 100 million naira rule. I just said I should remind you. That's tax. Thank you. You're welcome.
Thank you so much. Thank you. Victor, are you clear now? One more slot, one question. Okay, a hand is up there. Can you just walk towards my direction so you have the mic? Make it very fast, please. See that much question now. After now is a paid session.
Good afternoon. Okay, madam, now I want to ask her a question. Uh, there is this entitlement of a business folder that when I make profit, I am entitled to my profits. But here you were saying we have to separate ourselves from our business money. What am I entitled to as a business person? Is it my profits or do I have a percentage from that profit that I'm entitled to?
You're not entitled to anything. If it's entitlement to, you are entitled to nothing. However, because I know you look unhappy with the question, with the answer. So let me make you feel good. Most times we ask questions hoping that we'll get answers that will make us happy. And my answers will never make you happy. However, let me make you a bit happier so that you will not go away too sad. You did put money in a business. That's your equity. As far as I'm concerned, that is your money. The business owes you that money. And how you collect is entirely up to you. If you say, look, this business has made $1 billion out of 100 million, I want my equity back. It's fine. Collect it. Depending on how you structure the equity at the beginning. When you were giving it to the business, even though you are the business, you are the same, but mentally you have compartmentalized it. If you are saying, look, as at the time I set up this business, I get the business 100 million. As of today, the business is doing 1.1 billion. It is no longer equity, it is debt. You have changed it to loan. And then agree, oh, I gave you 100 million at 20% per annum. Please, I want to collect my 120 million. Collect it. And know that the money that is left there is not yours, so that it will die this entitlement mentality. Then when the business has started making money, the business owes you a salary for doing work. State what the salary is ab initio. Because if the business grows large enough, even if you don't want to scale, the government will force you to scale. There is an amount of money you will make, you must declare it. And the easiest tool is taxation. Once you have hit 101 million, the government must look at your books. Even if you don't want them to look at it, the government will bring their eyes to it because you are no longer an individual. You are now a controller of destinies. And once the government is looking at it, the government will say, bring an auditor. Meaning another external pair of eyes must look because we want to be sure that the activities generating the 1.1 billion are legit and true. Do you understand? That's why I started by saying you are not entitled. However, if you want to claim money that is genuinely yours, it is the money and the intellectual property you brought to the company. You can quantify them and collect them. The rest of the money belongs to the business.
Are you good? All right, please, thank you. Can we take one more question? We just have 3 minutes. One more question, I'll call it a wrap. Any hand up? All right. Final statements, final conclusions on this. What's your biggest advice for business owners come 2026? Godfrey, let's start with you. I love her passion. Please put your hands together for her again.
My one-stop advice for business owners come to this is know your numbers.
Know your
Know
numbers.
what you own,
Know what you own,
what you owe,
what you owe,
and what you're owed.
and what you're owed.
With these
Okay.
3 things, you're good to go.
Thank you. Thank you. Please put your hands together for him. Final comments from you.
Okay, so I will say, I don't know which of the philosophers, but to your own self, be true. Be honest. If you know that you are an agbabola, why are you pretending? Because we're all here, you're pretending that you have sense. If you know that true, when it comes to money, you don't have sense, be honest. Because what it will do to you is that it will help you put the structures to protect your finances from yourself. So in one word, to your own self, be true.
Be true. Thank you so much. Thank you so much. Today's conversation has revolved around 2026. And of course, you'll find out that from the questions and everything, there is a spending problem, there is a financial problem. Please do your best to be true to yourself. Thank you. My name is Daniel Washington, and do have a nice time today. Thank you.